I just bought more Mastercard. In this video, I will explain my reasoning, I will explain the moves I've made, some stocks that I have sold, and why I did buy more Mastercard. We will talk about valuation, and we'll talk about my overall portfolio right now. So you understand clearly all my moves. My portfolio is public, so you can see in real time what I am doing. For those who don't know it, my portfolio is public on this website called eToro. You can just type my name on the internet and you will see it. And now Mastercard is a full position, I would say. 10-11% of my portfolio in Mastercard. Before, a couple of days ago, Mastercard was like 8% position. So I increased my position from 8 to 10. That's a 2% increase. And I sold 2% of Lam Research. So I will explain everything in this video. We'll talk about the stock price performance lately. We'll talk about fundamentals, why I did sold some Lam Research to buy more Mastercard. We'll talk about valuation, etc., etc. So you will have a lot of information and you can make an informed decision whether you want to do it for your own portfolio or not. Because now if you look at Mastercard, this is a high quality compounder and the stock has been correcting a little bit. When the whole market is going up, Mastercard is going nowhere. If you look at the performance, let me check. Mastercard on a year-to-date performance, plus 4%, when the S&P 500 is up plus 17%. So yeah, Mastercard is lagging the index and I'm taking this opportunity to increase my position. And as the stock continues to drop, maybe I will continue to increase my position. Okay, so it was some small disclaimer before this video. In case this is your first video from this channel, welcome. My name is Christophe Noor. I've been investing in the stock market for almost a decade now, investing in quality companies available at a fair price, and have averaged a performance of 25% per year. Investing in great qualities when they are lagging the market. Exactly the same situation we are seeing right now with Mastercard. And as I'm speaking, the S&P 500 is up 17% year to date. And my performance is plus 23%. So I'm in range, good direction to reach my goal of 25% per year. And as I told you, I reduced my ownership in Lam Research to buy more Mastercard. Let me first talk about Mastercard because this is the reason you clicked on this video. I will talk about the fundamentals, etc., the valuation, and then I will tell you why I sold Lam Research. Okay, we'll do this in this order because you clicked on this video to learn more about Mastercard. Okay, a few days ago, I released a video saying I want my portfolio to be as efficient as possible because I think inflation will continue to stay elevated. So I think I want to invest in companies with pricing power, with fat margins. And at the same time, if you look at the hyperscalers, the Magnificent Seven, you have this big capex expansion. Some people worry we have an AI bubble. How can you invest in this market if you don't want to be invested in this AI bubble? Well, Mastercard is a good example because Mastercard doesn't have any capex. Very asset light, very lean, almost zero costs. And you have a duopoly with Visa, so nobody can really touch them. So you have a clear moat, wide moat. You are talking about a business that is growing 15% per year, minimal capex. What do they do with the cash? Well, you can check on Go to Focus here. Let me cover my points. Gross margins of 80%, so immense margins, net margins of 45%. You are talking about a growing revenue every year, growing net income every year, like 10-15% per year. They do massive cash flows, free cash flow generation. And if you look at the operating cash flow versus free cash flow, as you can see here, the yellow line, operating cash flow, the blue line, free cash flow, this is almost the same. The only difference between operating cash flow and free cash flow is the capex. So if you have no difference between these two lines, it means zero capex, okay? So zero new facilities, manufacturing plants, zero data centers built. No. Lean, asset light, efficient. Okay? I want my portfolio to be like this. I just published a video a couple of days ago saying like I really want to avoid companies that have a lot of debt or a lot of capex. Mastercard exactly fits my criteria. So what do they do with the cash? They do buybacks every year. They are repurchasing 2-3% of their shares. They pay a small dividend of 0.5%, and they don't have any debt problem. So what a wonderful opportunity, right? The big problem people had with Mastercard was the valuation. If you look at the financials, I can look at any valuation metric that can do the work. If you look at the most basic one, the PE ratio, look at the PE ratio over time. Mastercard has always been trading at a premium to the market. And even before COVID, like 2019, PE ratio of 40. And then in 2022, it went down, PE ratio of 30, went up to PE ratio of 35. And now, as the market is getting more expensive, the PE ratio for Mastercard is trending down. Let me show you the price to free cash flow for this year and the forward price to free cash flow. And let me tell you something that I have seen very few people talk about. By the way, if you want to become a better investor and improve your performance, I have a coaching program. It gives you the exact method I've used to generate 25% per year for almost a decade. More on that at the end of the video. In blue, you have the price to free cash flow. In red, you have the forward price to free cash flow. What is the difference? Let me explain. Okay, so this is your price to free cash flow. The formula is the market cap divided by the free cash flow. All right. And what about the forward? Let me put forward price to free cash flow. Sorry for the bad writing. I'm doing my best. You have the market cap. Market cap divided by the, it would be messy, but big F, forward free cash flow. Well, I'm talking at the same time because the writing is bad, but you get my intention. For the forward price to free cash flow, the only thing that changes is instead of looking at the free cash flow for this year, you are looking at the forward free cash flow. So for next year, for 2026. And if you look at these two lines in blue and in red, you see that now they converge. They are the same. So I believe Fiscal AI is wrong. You know I use Fiscal AI on a daily basis, right? You know I recommend it. I have an affiliate link in my description. If you want to use Fiscal AI right now, click on my description. It will get like 15% cheaper if you go through my link. And this is one of the best websites you can have to invest. It's better than the Bloomberg terminal, etc. But sometimes you have small bugs. And I believe now for Mastercard, for all the people that are interested in buying Mastercard, they can use Fiscal AI and it will be wrong. Which means now these two lines converge. The price to free cash flow is 28. The forward price to free cash flow is 28. So that assumes the free cash flow will stay the same in 2025 and in 2026. Do you really think the free cash flow for Mastercard will stay the same? I don't think so. Nobody thinks so. Even the estimates on Wall Street, if you look on free cash flow percentage change, on Wall Street, people expect, look at this, the free cash flow to be at $17.8 billion, and they expect the free cash flow to grow at 14% per year next year. So you don't think the free cash flow will be stable. I don't think the free cash flow will be stable. Wall Street doesn't think the free cash flow will be stable. Everybody knows Mastercard will grow its free cash flow, yet you have a bug in the matrix. You have a bug here. So the red line is wrong. The forward price to free cash flow is wrong. So the forward price to free cash flow is not 28. Let's calculate it. So we said it was the market cap divided by the next year's free cash flow. What is the market cap for Mastercard? Now it's Mastercard. Now 490. And what are the estimates for free cash flow for next year? Come on. Estimates free cash flow for next year of 17.8. Okay, so 490 divided by 17.8. This is what we have. We have 27.4, which means the red line here should be at 27. The stock is a little bit cheaper than what you can see on Fiscal AI and sometimes other financial websites. And do you really want to buy a business, high quality business, at a forward price to free cash flow of 27? For me, yes. I'm pretty comfortable buying this quality company because as inflation will continue to go up, Mastercard is a good defense. It's a good hedge against inflation. As you will have more capex in the future from the Magnificent Sevens and the AI bubble, Mastercard is a good hedge. Because if the AI bubble pops for some reason, Mastercard will be safe. The business model of Mastercard will be the same in 1 year, 3 years, 4 years, 5 years. So you can buy a pretty good high quality compounder with a wide moat available at a reasonable valuation for a forward price to free cash flow of 27. It's decent, and actually I have generated 25% per year investing in these special situations. Like sometimes stocks are trading expensively and for some reason they fall down in value and they reach reasonable valuation. This has been my sweet spot for generating 25% per year. So I'm more than happy to increase my position in Mastercard, okay? And it's a good defensive play. If you have a market crash, if you have a market correction like we had in 2022, Mastercard will drop less than the market. So you win in many cases. And what has been the growth rate of, free cash flow for the past 10 years? Let me show you. We'll do a little bit DCF so you can have my intrinsic value of the business. Okay. This has been the free cash flow over time, as you can see up and to the right. What has been the growth rate of free cash flow over time? Let me show you this. For the past 20 years. Average, median. Well, let's remove these extraordinary years from the great financial crisis. Let's look at the past 10 years. It's fine. For the past 10 years, in red, maybe that's a little bit messy, so let me explain what the chart is. In red, this is the percentage of growth rate of the free cash flow. So you see a big downward move in 2020. The free cash flow decreased 11% in 2020. And it rebounded 30% in 2021. And it increased again 18, 8, 23%. Anyway, for the past 10 years, the average, as you can see here, the horizontal line here, the average free cash flow growth rate has been 17%. And the median, as you can see at the left here, has been 20%. So if you want to put this information in a DCF, in a discounted cash flow model, if you want to value Mastercard, how do you do it? Well, you can use another website called Stock Unlock. They have the best DCF model. This is the best one, and I use it on a daily basis. The best DCF model you can have is on Stock Unlock. And also, you can use my link in the description to get a subscription cheaper, like 10% cheaper if you use my link. So, use my link. It's literally free money if you use my link. So, for the past 10 years, the free cash flow has grown at 17% per year. Do you think Mastercard will decelerate in the future? Do you think it will stay the same? Or do you think it will reaccelerate? Depends on you. Actually, it depends on you. What I think is the business will absolutely stay the same in the future. So, how do you forecast the future for Mastercard? Well, if you think the free cash flow for the next 5 years is going to grow at 17% per year, and if you think the business will continue to do buybacks, they will continue 2% of their shares every year. By the way, let me show proof of what I say, okay? Let me show you that they have been buying back their shares every year. Look at this. Boom. Yes. Now this is a new red line of the amount of buybacks the company does. You see negative levels here. Negative means how much reduction you have in shares. When you have -2, it means you have repurchased 2% of your shares. So 2% buybacks. When you have 1%, that's 1% buyback. 3%, 3% buybacks. Okay? So on average, for the past 10 years, they have done what? 2% buyback 2% buybacks. So yeah, there is a very high chance they will continue. Actually, if you look at their earnings report, they have no plan of changing the capital allocation decisions. So it's very, 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 almost 100% likely that they will continue to repurchase 2% of their shares every year. I mean, the business model is extremely simple. They have two segments, right? The payments and the value-added services. And one of them is growing more than the other one. Anyway, the free cash flow is growing on a regular basis, 17% per year. And the company is doing 2% buybacks every year. I don't care about the dividends. And what can be the price to free cash flow for this extraordinary business? Well, 39 is a little bit too high. Let me put 30. If these are my estimates, and these are my estimates, if I think the free cash flow can grow at 17% per year, they will do 2% buybacks every year for the next 5 years, and they will deserve a price to free cash flow of 30, then the fair value of Mastercard is plus 50%, $823, which means the stock is 50% undervalued. You have an upside of 50%, okay? And if you buy right now, you can expect a CAGR of 19% per year. This is why I'm buying Mastercard. You click on this video to have this. So here you go. Take a screenshot if you want to, but this is what I think will happen for Mastercard. Okay, now you can play around with the DCF, right? What if they don't grow 17%, but they grow 15%? Okay, this is your new value. The stock is still undervalued. And if you buy right now, you can expect a CAGR of 17%. Okay, what if they grow 12% and you want to be conservative? Okay, fair enough. If they grow 12%, you can expect a CAGR of 14% right now, and the stock is still cheap. What if they deserve a price to free cash flow of 25? Okay, let's be conservative. If you think they will deserve a price to free cash flow of 25, and they will grow to 12% per year, then the stock is fairly valued. And if you buy right now, you will expect a CAGR of 10%. For a conservative scenario, that's pretty good. And when was the last time the price to free cash flow was at 25? You can have several instances, 2016, 2022, 2020, I suppose. Let me check. 2016, yes. 2020, yes. And 2022. Very few moments you had a price to free cash flow of 25. One time in 2016. In 2018, no. In 2020, flash crash, but okay, let me count it as 2. And then in 2022, 3. 3 moments when the price of cash flow was at 25. So it's not a base case scenario, right? Because for the past 10 years, I mean, it immediately rebounded from there. It's not a base case scenario. This is what I say. It's a conservative scenario. It's very likely, let me put the average and the median. It's very likely the price to free cash flow will stay in this range of 30, 35. Look at this. The average has been 37, median 35. If you put 30 at 17% growth rate, this is what you can expect. If you want to salivate, you can put a price to free cash flow of 35, but that's a little bit too extreme, in my opinion. So Mastercard has very good chances of outperforming the market. And I'm buying more. As I showed you from my portfolio, now Mastercard is my 4th largest position. And I bought more Mastercard while selling a little bit of Lam Research, as I told you. I bought Lam Research a few months ago, and I had a quick double on the stock. I bought Lam Research at what, $80? 75, 80, something like this. And it immediately doubled in less than 1 year. So Lam Research is a very good quality compounder. It's in the semiconductor industry. Cyclical, great margins, great management team. The revenue is cyclical but up and to the right. The net income is cyclical but up and to the right. The free cash flow is cyclical but up and to the right. They do buybacks every year. Very smart. They have a wide moat. If AI turns out not to be a bubble, and if the chip cycle continues, Lam Research will print cash. The ROIC, the return on invested capital, is great, very efficient, very low capex requirement, as you can see from this yellow line and blue line. So it's great, right? asset light, no debt problem, they do buybacks, they print cash, but it's all about valuation. The stock has gone up so much, it has reached a very high valuation. Look at the stock chart for the past 10 years. You can see for the past 5 years, 3 years, now we are skyrocketing. On a year-to-date performance, the stock is up 119%. And I can show you what I mean when I talk about valuation. I can talk about any valuation metric actually. The PE ratio, the price to free cash flow, you will always have the same chart. Let's wait a couple of seconds so it loads up. But yeah, Lam Research is a great business. I'm a very happy shareholder, but it is now trading at a forward PE ratio of 32. And if you look at history for this business, even when the business had great years, strong years of strong efficiency, the business is a little bit too expensive. This is what you have. Okay. PE ratio is in blue. Here is your PE ratio for Lam Research for the past 10 years. You see it's very cyclical because this industry is very cyclical. And in 2021, you had what? 30. In 2024, 37. It went down immensely and I bought at what? 22 or 20. And now it's back to 35. Same thing for the price to free cash flow. This is your price to free cash flow for Lam Research. Went up a lot, down a lot, up a lot. So I don't know when the cycle will turn for AI. I don't know when the cycle will turn for chips. Maybe Lam Research will have a great 2026. Maybe the valuation will decrease because earnings will go up immensely. Maybe. That's a lot of maybes in my portfolio. And I think I want to trim the position. The stock has gone up so much, it became 10% of my portfolio. And I'm not comfortable having 10% of my portfolio in Lam Research because of, the tide can turn, and when it turns fast. So I don't want this. I want a defensive play. I did not sold out completely out of Lam Research. Maybe I will in the future, but so far I am seeing strong signs of a growing semiconductor a growing chip market, a growing semiconductor industry that is performing really well in 2025, and maybe it will perform really well in 2026. So when I see some cracks, when I will see some moves in this industry, maybe I will trim more. Yeah, but I was totally not comfortable having Lam Research 10% of my portfolio. Now it has gone down to 7-8%. So be it. When I built up the position, it was like 5 or 6% of my portfolio. And it went from 6% to 10% because the stock had gone up so much. Okay. So yeah, pretty good. I will also do another move in my portfolio shortly, but I will let you know in another video because I'm still thinking about it. So yeah, some updates on my portfolio, the reasoning why I bought more Mastercard. I believe Mastercard is a great opportunity right now. And it's a buy and hold for the very long term. Okay, it's a buy and hold for 3-5 years or even more. I can buy things and let them run for many years. I first bought Facebook or Google for many years, and I've been a shareholder for 8 years. TPL 4 years. I can buy things and let them run for many years. And I believe Mastercard is a very good opportunity right now. So this is the reason I'm buying more. I hope you like this format, some updates on the portfolio, and I wish you a nice rest of your day. Goodbye. If you like this content and you want to go deeper, I have a coaching program. In this program, you will learn the strategy I use to outperform the market. You will learn how to find winning opportunities. You will learn how to properly value stocks, when to buy, when to sell, so that you can build a strong portfolio with great companies. Additionally, inside the program, you will have access to an exclusive community of like-minded investors, and you will also have access to my personalized guidance to reach your investing goals. Click the first link in the description to get more information. You will get a short video that explains how everything works, completely for free. No need for your email address, just click the first link in the description and I'll see you on the other side.